Hello everyone, welcome back to the channel. Before we start, if you haven't watched my previous video about building an emergency fund, I highly recommend you check it out. Investing without an emergency fund is like driving without brakes. Eventually, something unexpected will happen. Today I'm going to explain how to start investing in the stock market, even if you're a complete beginner, and make sure you stay until the end because I'll share the ETFs that I personally think are great for beginners. And I'll also explain why I prefer ETFs over traditional index funds, especially because of the fees. Before you invest, build your foundation. Before you put any money into the stock market, you need two essential things: an emergency fund. This protects you from selling your investments when the market drops. If you don't have one yet, start with a simple goal: 1 month of expenses. Avoid high-interest debt. If you're paying 20% interest on a credit card, it doesn't make sense to chase 7% in the stock market. Without this foundation, investing becomes much riskier. What is the stock market? The stock market is a place where you buy small pieces of companies called shares. When those companies grow, you grow with them. When they fall, your investment also falls. But remember, the stock market is not a casino. It's a long-term tool to grow your wealth. How investing really works. Your money grows in two main ways: appreciation, the stock price goes up; dividends, some companies share part of their profits. In the short term, the market is unpredictable. In the long term, it has historically grown. First steps to start investing. Let's get practical. Step 1. Define your goal: retirement, buying a home, long-term growth, etc. Step 2. Understand your risk tolerance. If you're a beginner, diversification is your best friend. Step 3. Learn the types of investments: individual stocks, higher risk, more research index funds; diversified but often with higher fees; ETFs, diversified like index funds but usually with lower fees and more flexibility. And here's something important: traditional index funds often charge higher expense ratios than ETFs. That's why if I were starting today, I would focus on ETFs. They're simple, diversified, and low cost. Simple strategies for beginners. These strategies work extremely well when you're starting: long-term investing, automatic monthly contributions, diversification, not trying to time the market. Common mistakes to avoid. The most common mistakes are investing without an emergency fund, investing money you'll need soon, buying because something is trending, selling out of fear, not diversifying. The best ETFs for beginners. And as promised, here are the ETFs that I personally think are great for beginners because they're diversified, simple, and have low fees. VOO, S&P 500 VTI, Total US. Stock market, QQQM, NASDAQ 100 with lower fees, IXUS. International stocks outside the U.S. These 4 ETFs cover U.S. large caps, the entire U.S. market, technology, and international exposure. But very important, this is not financial advice. These are simply ETFs that I personally like, but before investing in anything, you need to have a clear strategy, understand your risk tolerance, and know why you're investing. If this video helped you understand how to start investing, make sure to like and subscribe. And if you want me to make a video explaining how to build an investment strategy step by step, let me know in the comments.